This might be one of the most important videos that you will ever see in your trading career, because what we're going to be talking about in this video is the best way that you can be trading and profiting not only with Tesla stock, which was what we're going to be using as an example here, but in general, how you can become a consistent profitable trader with the highest odds possible and still make some very, very solid returns. And what we're going to be talking about in this video is cash secured puts. We're going to be using Tesla as a reference. And if you guys like this type of content, I will do a full in-depth video on credit spreads, because I want to start a new format on this channel where every single Friday we go through, look at real-time options for Tesla. I can give out some recommendations on credit spreads, different option plays that I will be looking at. And I think it'll be good to have a couple of videos for you to revert back to so that you have a better understanding of, number one, how options work, and number two, what selling options are. So make sure you hit the like button, hit the subscribe button as well, because we're going to have follow-up videos coming up. And make sure you guys are part of our Discord community, which the link is in the description. There's free courses, free live streams, free seminars, free webinars, as well as free trades. And if you want access to all of my trades, the link will be in the description so that you can follow along with us in real time. Now, the platform that we're going to be using for our options is going to be Webull. It is a platform that I think is pretty good for a lot of people to start and to use. It is true that 90% of traders fail. And the reason for this is the odds are always stacked against you, especially if you're trading with options. Normally, the only way for your average retail trader to make money is to buy a stock when they believe it is at a lower price than what it will be worth in the future, and sell when the stock subsequently goes up. Of course, if you're somebody who feels comfortable or understands how to go short, you could go short shares at a specific price. You can recover those shares or cover the short at any price you want for a profit. You can see here that this only gives us one way to win: if the stock goes the direction in which we choose. Now, adding options to the mix is just going to give us more leverage to the upside and to the downside, unless you learn how to sell options, because selling options specifically through covered calls and cash secured puts, you can have some very, very high win rates. And let's explain exactly what a cash secured put means. So when you are selling a cash secured put, you are saying that if the stock does not close above the specific price that I sold the put for, I am forced to buy 100 shares of that stock at that said strike price. So let's use Tesla as an example, looking back at the beginning of this year. Let's say that we were trading at about $141, and you believe that there was no way that Tesla would close below $123 by, let's say, the end of January. So what you could do if you believe that is you could sell a cash secured put. And the beauty of selling a cash secured put is that you will win if the stock goes up, you will win if the stock goes sideways, and you will profit if the stock even drops but closes specifically above your strike price that you sold. And so you can see that we're not just winning when the stock goes up. We have many different ways to win. And this is what is so alluring when it comes to selling options and eventually spreads. It is currently Sunday, but let's pretend that the market is open. We're trading right now at $207.67. And what you want to do initially is pick a price that you believe Tesla will not close below. So for me, I'm not going to pick something like 206, 204, 202. I'm looking for something much more conservative, somewhere down around the $200 range. Now, as we start to look at strike prices and premiums, you're going to understand that the further away that you go to where the current price is, the less money you are going to make. And that's because the higher chance you have to actually be profitable. And so let's flip over right now to Webull and let's take a look at the options chain so you can get a better understanding of what I mean. The date for the contracts that we're currently looking at is April 6th, which is going to expire this Friday. The dates to your right and the strikes to your right are all going to be puts, and we're going to be looking to sell a cash secured put like we spoke of before. Now, some of you might be saying, how come we're looking at puts? If we're bullish, shouldn't we be looking at calls? You have to remember, we're not just buying the option. So the person who is buying the put from us is bearish, meaning the fact that we're on the other side of this option, we are bullish. We are selling a bearish position to a bear, which means we are contractually on the other side of that trade. So if we're looking at the strike price of $200, which is what I said I believe Tesla will not close below, you can see that right now The bid on this option is $3.75 and the ask is $3.85. If we were to scroll all the way to the right, you can see this percentage that says OTM percentage is this number all the way over here. The OTM percentage on this option is 66.72%, meaning that there is a 66% chance that this option expires worthless for the person that we're selling it to, meaning that we have a 66% chance of profitability, not even looking at technical analysis, but just off of statistics. So you can see that we're already operating off of the idea that we have an edge over the dealer. If this was going to be gambling at a casino, we already have a 66% chance that we are going to make money. If we were to actually go with something that has an 81% chance, an 85% chance, an 88% chance, you can see that the ask and the bid, or the contract price, the premium in this example, is going down. Like we said earlier, when you have a higher chance of profiting, you are going to make less money. So looking at the $200 strike that we spoke of before, I'm going to right click and I'm going to hit sell. I'm going to change the quantity to 1. And what this means is that as long as we close this Friday, April 6th, above $200, I will make $375. Now, where do we get $375? Because that's the price of the options premium that we spoke of earlier, the $200 strike. Premium for the $200 strike right now is between $375 and $385, meaning that as long as it closes above $200, we will make $375 for every single contract that we sell. So you must be thinking to yourself, if you have a 60, 70, 80% chance of profit, all the stock has to do is just close above $200 by next Friday. What's the catch? Well, the catch is that the position has to be cash secured, hence cash secured puts, meaning if you're going to be selling these options, your broker is going to have to take the cash equivalent to the amount of shares that you're selling and hold on to it to make sure that you can actually purchase the shares if you get stuck with the contracts. So in this instance, we would have to tie up $20,000 this week to make $375, which in reality is really not that bad, because the cool thing with selling cash secured puts is the worst case scenario, the downside. If on Friday Tesla closes down at 198, the downside is that I am forced to buy 100 shares of Tesla at $200. So doing this on a stock that you believe in long-term is just phenomenal. But what I want to do in a future video is explain to you, if you don't have $20,000 sitting around, how you can trade like this through credit spreads, because I truly believe that for 99.9% of people who have portfolios less than at least $20,000, credit spreads is going to be one of the best things for you, but you have to understand the basis right now of what a cash secured put is. I hope that this video helps, guys. We're going to have options courses coming in the future, and make sure you guys check out our Discord where you can watch our technical analysis courses for free, our disciplined traders courses for free, and if you want access to all of my trades, which I'm up $17,000 in the past 2 weeks, we've been absolutely killing it. The link will be in the description. Right now, you can join for only $1 a day, but within the next couple of weeks, the price is going to go from $30 a month up to $50 a month. So get in while you're originally there, because the price will never go up for anybody who is grandfathered in. Thank you for all the support, guys, as always, and I'll see you next time. Peace.